It's okay. Also, thanks for the charts you sent over and the trades. We're going to discuss all of them, and I have some questions about uh, some pairs and how to hedge a position, what to do with a hedged position, and everything. Yeah, we can cover that, no problem. So, like always, uh, let's start with the Euro US dollar, the weekly chart here, and what happened? The price retraced back to support, right? So we had a move of about 400 pips, and it took it 1, 2, 3, 4, 5, 6 weeks almost to do that. Actually, so looking at it on the weekly chart, yes, it looks like a uptrend, but it's a really slow moving pair. Okay, 400 pips in 5-6 weeks is just not really that powerful, right? So I'm not in favor of trading this pair too much right now, only when it reaches support like it did here. Okay, we have support here, there, and here again. So now it's an area where we want to watch closely. If we're short, of course you would be thinking of taking profits even for the remaining lot soon if you get a bounce. Now if it's breaking, then it's different, but the weekly chart is still pointing up. Price is sitting on the 36, also close to our support line, and that is just can be very, very powerful. Okay, now on the daily chart you see we had this kind of a range here, 1, 2, 3. Price moved down about 150 pips. It retraced back, created a higher high, but did not create a higher low. It came back down and hit the 200 EMA. And if you look back on this chart, you see you have touches on the 200 EMA many times. And every time the price goes back and hits the 200 EMA, it bounces off it. So the chance that it will do this again is there. Now we just have to see if the price breaks the 200 a little bit and bounces down, or will range a little bit and then retrace, or if it will break that line. So this is an area where we want to watch very closely if we like to trade this pair. You can see up here on the daily chart, of course, we have multiple tops. We have that false breakout. So this is now our resistance area and support, and we have kind of a wedge here. Okay, so far. Now, that's what we are looking for, or the break. If I switch to the 4-hourly chart, you already got your first green candle, major support on the daily. So actually, up here you had an aggressive long bounce trade. Okay, so anybody is into bounce trading, but the pressure is there. Price is really was just dropping to support, and now it's retracing, but really slowly, and it's also creating a 1, 2, 3, a short 1, 2, 3. So for me, it's just, if you don't bounce trade, then you just have to see and wait what's going on in this area. Ideally would be what I always like to see in an area like this: if the price really breaks the support a little bit, comes back and creates a candle with a spike. Okay, if we get the spiky candle, if we then get, I don't know, a higher low on the 1-hourly, 4-hourly, or green daily candle, that is the best sign for bounce trade. Okay, to target the highs here, and of course in the end the highs up here. That's what we should focus on before we do anything in this area. Okay, back to the 4-hourly. So ideally price going down, spiking, or if not, then at least a higher low. and something like that. And that would also give you a green candle on the daily chart. Okay, better is both a spike and then a higher low, of course. Do you understand what I mean? That is for bounce trading. It's a bounce trading strategy to use longs close to support, okay, and then actually targeting the highs if you want to do it this way. If not, if you're not into bounce trading, then you have to wait for the support break. This line has to break, and then we want to see a 4-hourly 1, 2, 3 setup below here. There we go. Now that's for the euro US dollar. Any questions here? Okay, let's switch to cable. Here it looks better. You had some setups on lower time frames on the 1 hourly chart, not yet on the 4 hourly or daily, but as expected at some point we said, okay, price is hitting major resistance for a while, right? We had resistance from down here to up here, a lot of touches in this area, and we also had a spike on the 633 in combination with the previous high, as you can see here. And now at last, the first big red candle in making, and we need to watch closely. The aggressive traders are in already. Everybody else needs to wait for 1, 2, 3 at least on the 4 hourly chart, okay? Because the price already moved so much, we had the lower high, and then you see it just dropped 300 points. So looking at that, what happened here? You had your wedge, delete all the other lines, and in the break the price broke out of the wedge. So when that happened, you have aggressive trades, of course, but if you want to wait for your classic 1, 2, 3, you also need to wait for the break of your major support line, right? If you're not aggressively trying to trade this too close to support. This was still support, don't forget that, right? You need to wait for setup below here, and this just dropped. So what you actually got is your 1, 2, 3 on the 1 hourly chart between the 200 and the 633, which is the sandwich situation. But if you use it because price hit major resistance and gave you a setup on the 1 hourly below the 200 EMA and out of this wedge, then okay, it's an aggressive entry with a stop of about 50 points. And price went down over 200 pips. Other than that, you only got a chance if you draw the line correctly on this time frame. You will see it's always different on MT4 if you change the time frame. So if you zoom in, you'll see your trend line. I don't know if I can do it here so far, is somewhere there, okay, in this area close below the 633, somewhere here. And the only thing you got there is the 633 break, which is really difficult to spot. The crossover is up here, so it's a very aggressive thing. It's not easy to spot if you're not too experienced with it, okay? So if you don't like it, you leave it alone and just wait for the 4 hourly chart to give you a setup. And you didn't get any yet. We might get one soon or later on today. And then you can start drawing your resistance line again, maybe from up here. Maybe the angle is changing nicely. And if that happens, you might get a setup there. But if you're not happy about it because the price moved down 360 pips, you want to be conservative, then you have to wait for the daily 1, 2, 3 first, and then go for a short. Okay, and then of course you're going to target the 36 to start with, and later on, if the break, in case it breaks, you would target the lows, the first lows of the range where you have the most touches. In this case, it would be here, okay, below the 200 EMA, later on down here. But that's not for today. I mean, we need the confirmation first. Why? Because this pair could still bounce on the 200, or bouncing right now. Sorry, look at the weekly chart. It bounced again close to the 12, right? We had a situation like this before. Price broke the 36. Of course, here we had a lot of support. It was close to the 200 and everything. After that, the price moved another 700, almost 800 points. But you never know if the trend is strong. You could see the same thing later on. So if you're not already short, you have the break, yes, but it might also just explode after day and go back up. So watch closely, wait for the confirmation, at least on the 4-hourly chart, before you take new longs. Okay. I had a question. Somebody sent an email and said, okay, what about bounce trading this on the weekly chart? Could I do that? So if you look at it, you know you have a range here, since here, down here, and here. It's a lot of resistance in this area. Price moved up 1,800 points, and now you get the first big weekly candle. And if the week really ends up giving you this big red candle, and that's another, what, 3-4 days, right? If you count today. Then, yes, of course you could take it because it broke your line and it's a red candle and it's closing lower than it opened. If it closed low, of course, if it's closing somewhere here or here in this area. But you have a stop of about 500 pips. That means you have to target at least this support and later on the other support. And if you do that, if you have a stop of 500 pips, then you have to make sure that the 500 pips are not more than 2% of your count, better less, right? So of course you can do that. You can do it on the weekly chart, no problem, but you need a big stop because it could be that the price goes back for another week, goes against you, plays around there, maybe for a month, you never know, and then goes down. And if you have a stop just, I don't know, somewhere a little bit higher, it wouldn't make any sense to bounce trade this on the weekly chart. If you use the weekly chart for bounce trade, you also have to use the weekly chart to place your account protection order, right? The stop. Do you understand that? Okay. Great. So that's that. Let's see what the USD is doing. We got our 4-hourly shorts, right? We waited for those signals last week and they came, and some of you took the trade, and well done, and thanks for the charts also. What about the targets here? I mean, you had a stop of about 90 pips that went down at 200 pips. It's a win-win scenario anyway now, and price is close to support. That is the 200 was our target, right? In this area somewhere here, and later on the line coming from the weekly chart, which would be from where the price is right now, about another 150 pips. Okay. If the price reaches this area, then of course we can look for more bounces here, okay? Because if the price bounces in this area, this would be a big weekly long 1 2 3. But for now, because we have a lot of pressure, it's only shorts, and we also have some hedge trades here. And I will explain again how that works. Let me just, this is our daily trend line, right? We had the bounce, a lower high, we had the break, and after the break, the 1 2 3 setup. On the 4-hourly chart, with a stop of about 90 to 100 pips. And what happens here is, or what happened, that price went down already 300 points. So it's a big 1 2 3. It's not like a tiny one with a very small stop. It was a big but smooth, nice 1 2 3. Look, it looks good on the chart. So of course you also have the 200 EMA. You have a nice 2 to 3 line break. So you have everything you need there. And as we always say, you know, here it's a 200 pips range between the 200 and 633. So it's a sandwich situation, but in this case it doesn't matter much because our focus is the big retracement that never happened, okay, before. So the price moved up 800 points, and if you get the shorts you're expecting, you ignore sometimes of course everything else you get on the lower time frames. And if that's a sandwich, that's not really a sandwich, it's not that close by, right? But it visibly, if you look at it, it looks like that. So you know that it is far away. It's not like a really tiny sandwich or something, and you don't have a range in between here. You don't see the price moving between those before, so you just kind of ignore the sandwich part because you look at the bigger picture and wait for this big retracement. So you use the 4-hourly for your shorts, and then you just go and target your support area, which is, if you look back here, this was the previous peak from September. That's where the price bounced already a little bit, so we might get a retracement and maybe another chance to go short. Now if you are long on this pair, let's say you took some longs down here on the 4-hourly chart after the wedge and the break, and you made just, let's say, 100 pips profits, a stop, price moved up about 600 pips. That means you made 100 and 200 pips, 300 pips already, and you want to trade it as long as possible. So if the daily breaks, okay, for good, and you get a setup there, you have to hedge the position up in case you want to hedge it up. So why would you want to hedge a position? Only if it makes sense, and that means if you want to milk the market on the way down, because on the higher time frame you expect a bigger retracement, you actually expect a 1 2 3, but your main goal is much more than just 500-600 pips. It's a weekly chart, and if you look at it, or even on a monthly, you might get, I don't know, another, before it's reaching the 600 and then more resistance, maybe you can make another 500-600 pips or even more out of that trade. Yeah, and if you see the weekly chart is creating a big 1 2 3, you are in down here, you know, on a 4-hourly chart. Of course you expect a bigger retracement at some point. You expect this 1 2 3, and because you know you would give back a lot of pips again, you hedge it up, make pips on the retracement, and when the price bounces you get rid of the remaining short position, keep whatever profits you made, and leave the long running that you have since, I don't know, in this case last year. Okay, that's why you hedge your position. If you don't have in mind to grow the long, like to make more out of that big swing long trade you entered on a lower time frame, there's no reason to hedge it up. If you don't think of growing it, if it doesn't make sense, if there's no reason to keep that, you don't have to hedge anything, of course. You just get rid of the long and take the short. Yeah, or if you place the stop, you get stopped out, then you take the short. But if you say, okay, it just looks great and I want to make, I don't know, 1,000, 2,000 pips out of this trade, I just hedge it up so I don't have to look for longs later on. I make pips on the way down, and if it's bouncing up, I get rid of the last position on the short, keep whatever I can make, in this case already 100 and 200 pips, or 90 and 180 pips. And if it goes down and bounces here, for instance, and it looks really powerful, you get rid of the short when you get, let's say, 4 hourly long 1, 2, 3 after the bounce, and just let the long since down here, for instance, running. Okay, that's when you hedge. Otherwise, you don't hedge at all. There's no reason to hedge if you don't have a good goal and target. Okay, perfect. So that is still strong. Let's hope it bounces and moves lower again. Now the Australian dollar, US dollar, as expected, you know, a big 1, 2, 3. We might get another 1, 2, 3 here on the daily chart. We still have, of course, the trend line, and we got a break before, but it was not confirmed. So here we watch closely. If that breaks, we want to see the 4 hourly 1, 2, 3 over here, because if that's not happening and the price moves down again, then we still focus on the shorts, right? That's simple. Here we go. So you need that 1, 2, 3. You need the price actually, ideally, to break this area a little bit would be great. Then you have a little bit of support. And ideally, you know, break of the 2 to 3 line, and also the trend line. USD Canadian dollar still up, and of course the long traders are happy, and this is the line you have on the daily chart. But you don't want to wait, you know, that if you have another position running for the price to go down to hit that line and getting close to break even. So here's the same story. If you are long, you could hedge it up on this 4 hourly chart, for instance, with a short stop, of course 20 pips over here, so somewhere there, and see what happens. So in case it goes back up and kicks you out, then the short is over, but you still have the long running, which will make profits from down here. Okay, so only if you like hedging, of course, and then you can target the 200 EMA, and of course in extension the support line down here. Okay, Euro GBP, same story, right? We had these 1, 2, 3s and another 1, 2, 3. As you can see on the daily, on the weekly chart, a little bit of support down here and later on down here. But on the daily, the price already bounced many times. You had that kind of a range here, and then another 1, 2, 3, another 1, 2, 3. So again, here the price is sitting on the trend line, and the charts are not looking great. Yes, of course, there were daily 1, 2, 3 setups, and you cannot ignore this. But by looking at the chart, you know the difference now between a nice trend line break and looking for the first setup after trend line break, compared to this, where you actually don't have an uptrend close. It was here, so that here was your first setup below, and then you had this downtrend a little bit and kind of a range again. Price tried to find resistance. You got another short below here, and afterwards more, but always we want to look for the first setups, right? After the trend line break to be conservative. Everything else is aggressive. And now that the price is on resistance, we want to see if we can get a break or not. Look at the 4-hourly chart. What happened here? If you draw the line, you can see that we have touches on the 200, and every time the price is touching the 200, it's actually bouncing on it. And it looks like it wants to do that right now again. So we have to watch closely, see if we can get this 1, 2, 3. The price breaks the line. Ideally another 1, 2, 3 as a confirmation, because now we can draw a support line. If that's not happening and the chart starts looking choppy again, you just leave it alone. Okay, it's not the best pair to trade right now. It's just not moving much and it doesn't look good. That's my opinion, of course. Okay, Euro CHF. The 4-hourly 1, 2, 3s, and still lower highs and lower lows. So if you're still short here, that was your entry with a stop of about 50 points. It went down about 80. So probably not hit the second target yet. And if you see on the daily chart, we have a lot of support. We had this range. So again, not my favorite pair, but if you like it, it's up to you. It also had support again down in this area, and if you look at the weekly chart, it just does not look that nice. Yeah, looks like a, I don't know, art painting, but not like a nice chart, right? So it's not really. Now if it's bouncing here, and it's going up again, you can use this and look for an entry to trade the range. But other than that, right now only the 4-hourly chart looks nice, everything else does not. So if it's bouncing here, it creates a lower point, then you probably get the second target out, and as long as that looks good, okay, no problem. But if it breaks, you have to manage the trade, right? Now something that looks nice, the Euro Yen. We all discussed those shorts before that happened, and some of you took action, which is great, some not. So next time you do it, okay. And we were waiting here again for this break, and we know that we have, of course, support in this area down here, but we also expected this retracement. And on the daily chart, the 36 broke, and on the 4-hourly we got ourselves an entry below the 200 EMA. After that range also, of course, you even got one before, but that was still sitting on support, right? If you check the daily chart, there was the price playing around on the 36 EMA, and if you took this one, you had to find also your resistance to place, come on with this chart here, to place the stop correctly. In this case, the only line you had with the most touches were up here. So that would have been a big stop for about 150 pips. And that's the only good place, because if you were to put it just over there, if you look at it, the price would hit the stop. It would not break the line, but it would hit the stop if you just put it below here. You just placed it there. If you draw a line to here, you'll see it's not like you don't have history. So if somebody did, it's not that illegal, right? So because you can still connect those touches, but the more previous lines would have been those 1, 2, 3, 4, 5 touches. Actually, this also counting in. Okay, but in case somebody did it like here, it was not that bad. Okay, what you don't have is a lower point on the chart. Okay, you have a double bottom there. Ideally you want to see price creating a lower low on the chart, so another clean break to get it. So in case you did do this aggressively with a stop here, then you just had to manage your trade. With other words, it would kick you out here. If you had the stop over the resistance line, it would have been okay. But then you get your second chance after that 1, 2, 3 with a stop over here, and you have the 200 EMA and the 36 EMA, right? You also have 1, 2, 3 big candles, green candles, that cannot break the 200 EMA. So here with a stop of about 100, price moved down already 400. That means it's a win-win. Last lot about 350 pips in profit right now. And the daily target, of course, the line, the 200 EMA, which comes also from the weekly chart. So well done to all of you that took that trade. So in case price breaks the 36 EMA, okay, we'll expect a bounce in this area. As long as it just a lower high, you can still stay in the shorts. But if it looks too creepy or it's bouncing too quick, then of course you get rid of the short, because remember, this is still a big long weekly 1, 2, 3 and an uptrend. Okay. Same on GBP JPY, more aggressively. We had the 4 hourly 1, 2, 3s, and we had another one below here. Here you have your history, you have your resistance at least closer, the second entry. Then here, in this case, it's the only place you can put a stop, because if you place it above that line, that would be 2 touches only as well, and it would be like 300 points away. So in this case, only aggressively over there, or you have to wait for the next setup, which is another 150 pips, but price went down about 500 pips. The same scenario on the daily chart, it's going down. And on the weekly, this will be your target. Okay, the 633 of course is support, but ideally would be great if the price could go down to here and make another 500 points. You have 1,000 pips trade on the retracement. Of course, then we look for bounce for sure. If it's a lower high, okay. You can later on look for shorts again, but it could also be just a continuation of this powerful uptrend. Okay, a GBP CHF. We mentioned that before. I don't like this chart too much, right? All these 1, 2, 3s, yes, but a range, and ideally using lower time frames to make quick profits, and then get rid of that in this range. Also on the weekly chart, it's not too strong, right? And the price always retraces as much as it went up, so it's 100% retracement all the time here, lately at least. Yeah, but and now that it came back that far and even hit probably the stop, if you had it on the daily chart, I would stay away and don't trade that until it's really giving you a direction. It just doesn't look nice, right? And Euro Australian dollar, again here, lower time frame longs only, or the 4 hourly aggressive and late, and we got a lower high and a break of support, and this went down on the 4 hourly chart. Since here, now here what happened, it went down too quick, and you have a very big candle of 190 pips, and the close is way below 0.2 on the 1 2 3. That's not good for an entry. So ideally now you have to wait for another 1 2 3 on this pair, and then you have also history and resistance, and then you can target the line that comes from the weekly chart. Okay, gold is still playing around between support and resistance, so we don't have to say or do something here. It's just looking the same and no reason to do anything. GBP CAD bounced after the triple tops up here. We have some people hedging this up, so well done. Again, same scenario, same explanation we did before. It would be an aggressive hedge when the price breaks the 36 for good. Somewhere here you have your lower high, and that's about it. And if you don't hedge, you have to get rid of the position, of course, and look for short setups. And on the daily chart now, because the price hit the 36, you cannot actually look for shorts anymore, right? You need to wait. If the price creates a lower high and then goes down, then you can look for shorts on the daily chart. Also, of course, on the 4 hourly, what we had was what we mentioned, the bounce after the triple tops, aggressive bounces here or here, no problem, but the stop had to be over there. So if you did that, then everything okay is okay. And otherwise, now you really have to wait. I wouldn't touch this pair until it's giving me now a direction again, a clear break or a continuation of that trend. And that would also mean if it goes up again, you have to get rid of the hedged shorts, right? If you hedged up here, then when the price moves down and really, creates that lower high or that 4 hourly higher low, like 1 2 3 over here, then you want to get rid of the remaining short position for sure. But that would be only for the people that hedged aggressively after the break. And if you didn't hedge because your entry is down here, I mean, we have members that are long since, I think, since before last Easter, right? And some people just reinstated somewhere here in September, October, November. So if you did that on the daily chart, it would be still 1,200 pips. You don't have to hedge anything. You just see what happens in this area. If it's just bouncing and moving higher, okay, no problem. If the price comes down to your support line and it gives you the lower high here, of course, then you have to hedge latest there. If you want to hedge, and use the weekly chart as a guide, because this could really go down a lot, up to 1,000 pips or even more. Then, of course, hedging only if you want to make, I don't know, if your target is 2,000-3,000 pips, probably 3,000. It's close to 2,000 already. But if your target is this area, the 200 EMA, next resistance 1.92, then of course you have to hedge it up, or you get rid of the longs. You don't have to fall in love with the position just because it looks that great. You can get rid of it, go short, and if it makes sense again and you get good setups, then you go long again. Okay, so keep an eye on this one as well. Same thing here where we had this break out of this channel. Only the aggressive traders on the lower time frames got entries here on the 1 hourly chart. Below that channel, everybody else now on the 4 hourly has to wait, ideally for the daily 1, 2, 3. And if we get that, then we can easily trade more shorts and target weekly support, the 36 EMA, of course, down here. Okay, great. That's about it for today. Tomorrow we have the morning session, right? Don't forget that. We have the session at 10 o'clock my time, which is 8 o'clock London time in the morning. Okay, because you send emails and people wanted the morning session, so no problem with me. And also in 2 minutes, I'll switch to the Renko Bar course, okay, the live course, the Renko Bar course on the other link you have there in about 2 minutes. Okay, if we don't have any other questions, catch up with you tomorrow, okay? Yeah, don't worry, I recorded it.